following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related, a little bit of options wit, a little bit of options wisdom, throw in a sprinkle of analysis, a dash of education, some insight, some unusual activity, and mix it all together. Throw in maybe a little sprinkle of cherry on top of some fun/hilarity, and you have our Option Block mix. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding Options Insider Radio Network. And if you haven't checked them out recently, I encourage you to check out our latest additions to the old network. Of course, the Options News Rundown, hosted by our own Dan Passarelli, and the new Wide World of Options, brought to you by the Options Industry Council. That's hosted by our friend Joe Burgoyne over there, and he takes a nice deep dive into all things options, kind of like this show, but a lot different. So take that with a grain of salt. But check them out if you're very interested in all the things going on in the land of options. Speaking of things going on in the land of options, we have some great stuff going on the show for you today. Our usual co-host, our usual cohort, partner in crime, Uncle Mike Tusaw, has been sidelined with some nagging dental injury, shall we say. So that, of course, makes it hard to talk on a radio show. Luckily, we have a more than able stand-in. He's been on some of our other programs in the past. You may remember him from his appearance on our Volatility Views program. I've also had him on our Options Insider Radio program several times, including very recently at our Options Industry Conference shows a few months back. Of course, those of you who made it to Chicago for our Unusual Activity Forum also had a chance to see him in person there. He is Henry Schwartz, the founder and CEO of Trade Alert. Henry, welcome to the Option Block program, sir.
Thank you, Mark. It's always good to be on with you guys.
And now, since this is your first time on this show, we, of course, have a lot of new listeners to this program who haven't heard your other appearances and shockingly couldn't make it into Chicago to see you in person. So why don't you give them a little bit of a rundown of what it is you do over there at Trade Alert?
So Trade Alert is a company I started about 7 years ago now, if you can believe that. And we focus exclusively on option flow analytics for primarily for the professional market, the sell-side broker-dealers, hedge funds, prop traders, a little bit of retail and private individuals. But basically, we take every single trade as it's happening and slice and dice it and try to qualitatively and quantitatively break things down so that we can help people figure out what's going on among the 15 to 20 million contracts a day that trade.
Yes, that massive fire hose, as I often refer to it, of options volume and options data, helping to parse and find the juicy tidbits that are actually worth analyzing. You can see some of Henry's handiwork and Trade Alert's handiwork, of course, on the optionsinsider.com every day. We do a lot of our midday and end-of-day rundowns and top most actives. Those all come from you guys over at Trade Alert. Of course, if you'd like to see more, surf on over to tradealert.com. You can see the full panoply of Henry's offerings, including Option Alert and a lot of other cool things going on over there. Maybe even a link to what's trading. A lot of things cooking over there at tradealert.com. And Henry's been nice enough to join us for the entire show, which is why I rope him in as a guest co-host. Of course, I am also joined by my usual partners in crime, starting off in order of proximity this time, the man who just got some great news over on his neck of the woods. You know him as the Viceroy. He is none other than Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Hey, Mark, good to be back. Excited to have Henry on, and I'll share the news with the 200,000 folks who download now. I'm going to be a grandfather in January. So that news has been embargoed for a couple days, but it's public news as of today, and I'm very excited. Hate to say I'm a lot more excited to be a grandfather than I'm excited to have Henry on the show, but I'm very excited to have Henry on the show, and Henry is being modest. I met Henry about 20 years ago, although I seem to be a lot older than Henry. I have not aged as well as he has when he ran part of the index and dispersion book at a little company called Salomon Brothers. So one day we got to get those stories out of Henry. That would be an interesting show.
Is this the... Oh, go ahead, Henry.
No, I was going to say, it was the good old days where we used to run P&L every Friday, and that was about it.
I like that. That sounds nice. Weekly P&L.
How big were the books at Salomon Brothers, Henry? And if you can't talk about it in great detail, just give us what you can.
I can talk about it as much as I want because the company's gone, and I don't think anybody can come after me. And, I'll tell you, I was probably... There were bigger fish than me, but I do remember a couple days where I looked at the screens and, real time, Greeks were still kind of new. But I said, is it true that we're long 400 futures? And this is when the multiplier was 500. And then my partner on the desk said, yeah, we are. And, you can just kind of imagine the P&L swings when it goes your way and when it doesn't go your way, when you have that kind of room to run. So there was a lot of loosey-goosey action back in the 90s.
That's enough for popping a few Tums and a few sleepless nights sitting there on 400 futures worth of deltas there. That's a sizable position, shall we say?
It was.
Speaking of sizable, of course, we are also joined, last but not least, I'm not sure how the sizable refers to him, but I'll use it anyway. He is none other than Andrew Giovinazzi from OptionPit.com. Perhaps sizable in his appetite for those delicious lobsters over there in Maine. How about that, Andrew?
I'm doing well. And you were talking about pots of something, and I was thinking lobster pot was coming to mind. So, but it's time because in Maine it's like 80 degrees and summer's in full swing.
There we go.
Fantastic.
Time for some delicious, succulent lobsters.
C, and more C, yes, C.
All right, and that's going to do it for the intros. Now it's time to roll right on into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we run down what was trading, what was moving the old markets today, and unlike many recent shows where Alex and I have complained about having to tear up our notes halfway through the day and starting off again because the narrative of the day had completely shifted. Pretty much today, what you saw is what you got. It was a relatively mild, modest, unched day on the street. The indices moved around a little bit, but nothing too dramatic. Most of them closing fractionally unched on the day, up a little bit, but nothing really to write home about. And VIX cash coming off to the dark side, down about essentially unched on the day as well. Not too much going on in either direction, which is actually a refreshing change of pace because it allows us to kind of peel into some of the interesting other activity that's going on. Of course, earnings season is finally underway and in full swing. Gives us a lot of great individual names to talk about. Maybe we'll kick things off. We'll look back a little bit at some of the things that were lighting up our tape recently and some of the stuff that I know you guys, Henry, over there at Trade Alert have been keeping track of quite a bit. I know there's been, let's just go back to last week. Let's start off there and we'll kind of roll our way forward, pun intended, because there was a lot of interesting activity last week on Leap coming in from Friday. Of course, Leap Wireless, ticker symbol LEAP. They're in the middle of a big corporate action, and we saw some interesting movement into the calls going into this into the pre-deal announcement phase. What was it that really lit up your tape over there at Trade Alert, Henry, and what caught your eye over there in Leap?
Well, I'll tell you, if you're only gonna trade a couple hours a month, you want to look at things on the Friday afternoon at around 3:30, and just pick your positions that way because it's summer Friday. People, half of the street disappears around noon, and around 3:45, I was like, wow, look at that! Somebody's buying 9-cent calls to open on Leap, and all these wireless names are kind of hot because of Sprint and. People saying there's not really going to be any, there's a lot of consolidation and no more independent wireless companies. And, sure enough, not even 20 minutes later, it's 10 minutes after 4, I think the news broke. And it was, it's huge premium. I mean, 110% of Friday's close. Those 9-cent calls, which were the July 9, that had a week to go, that they bought to open for 9 cents, $9 today.
Yeah, those are pretty sizable winners.
Like the
Leap closing today at $16.95. If you look here at a chart, Leap was pretty much hovering around $6, pretty much unched for the better part of the past year or so, and then all of a sudden just off to the races. It had gently drifted up towards 8 going into last Friday, and then the news broke and just doubled essentially instantaneously. That kind of activity tends to fall definitely into what we would categorize here in the old odd block. I don't know, Andrew. We did those GVZ earlier this year, but 9 cents to $9. That's probably up there in terms of our best bang for your buck trade for the year that we've probably seen so far.
I think that's the one.
That's the one.
That's pretty huge.
Yeah, that's a good one. That's one of those ones that we did our unusual activity forum. Whenever we do the odd block here, we like to parse those a little bit because those are the kind of things that are definition of unusual. Unfortunately, it went up on a Friday afternoon after our show has already aired, so we don't get to discuss those until the following week when the activity has already happened, like today. But nonetheless, interesting stuff. I'm sure a lot of people will be looking into those because 9 cents to $9, even the people at the SEC who don't really understand options very well can see that and say, this is perhaps a wee bit dubious what's going on in here. Now, I don't want to beat the drum too much ahead of our odd block session as well, but there has been a lot of other stuff lighting up your tape. I know over there at Trade Alert as well, Henry. Of course, we pick up some of these on Options Insider. Going into today, we, of course, have big earnings season. It's that time of year where we all like to get a little more active as options traders. And to preview our around the block a little bit, we have, of course, Goldman-Sachs coming out tomorrow. Before the open on the 16th, they closed today at 163 even. And looking here, let's pull up some nice weekly straddles to go. We're looking at expecting a roughly $5 move here in the name. Looks like going into earnings. So yeah, they're expecting that at the money straddle about $3. I'm sorry, about $5. So looks like some action. And you've been watching Goldman Sachs here for a while here, Henry. What's really been catching your eye in the run up to earnings here, and what you've been seeing lighten up the old tape over in Goldman?
Yeah, well, I mean, Goldman, like seriously, most names that have started the season, there's a lot of upside action. Goldman, it was the 165s and the 160 calls even last week when the stock was, I think, around 155, 158. So, the stock is really kind of lifted into earnings. We'll find out tomorrow morning. I would guess, because they're really the 165 strike action was still continuing today. So I wouldn't be surprised if we get another pop. CITI was up 2% today after. The Goldman at $5 straddle. Yeah, I don't think we see a $5 move tomorrow. I think maybe we see a $3 move. But that's kind of in line with the recent moves. In January, I think it had a 4% spike. So people might be looking at that. It seems like, even if rates are starting to notch up, these financials still pretty strong, lots of new highs. And, for this week at least, it's all about upside.
Yeah, looking at the numbers here today, another 12,000 of the July 165s went up on open interest of just 8,000. So even if it was all closing, another 50% of the OI going up again today. And I'm guessing most of that was not closing, but probably opening ahead of the earnings tomorrow morning. Of course, this 165 straddle, should be pointed out, has about $2 worth of juice in it. So it's really about $3 of premium floating around in there. So maybe that probably comes closer in line to what you're thinking about with a $3 expected move here in Goldman. But yeah, a lot of upside paper here. I'm looking here at the downside, not so much, substantial, but nowhere near the 12,000 contracts going up on these July 165s. So people obviously thinking that, like you tend to think, Andrew, that the past 6 months seem to have been a very, shall we say, favorable time for Goldman.
I think this is the sweet spot. You got rising equity markets. You got turmoil in the third world. They can trade bonds like a madman. If they're not making money the last quarter, then they're never making money. They're making a lot of money. That's just me, though.
Well, of course, Henry touched on the Citi earnings as well, and they came out before the open today. A 41% increase in Q2 earnings. Not bad. The stock doing all right. Stock ended up closing on the day up about 2% on the day. So they increase earnings 41%. They get a 2% bump. I guess that somehow works out well. I didn't parse all the numbers to see what that 41% increase translates to, but we'll see. Apparently the street did, and they said about 2%. So that works out for them. Of course, Citi, it's kind of weird talking about Citi now and thinking back to what it was just a year or two ago when it was just this HFT monstrosity trading $4 and just all of the paper was nonsense. And now it's this $51, $52 thing that trades more like a legitimate financial company. And it's hard to almost reconcile those two things. Citi in the $4 era and Citi in what it has become now in the $50 range. And
it's kind of a bummer. It was a good it was fun to trade down there.
It was. And that's why the HFT guys loved it.
There's no real downside, and you could just, you could buy right the thing till your head caved in, and now it's just not as fun. I hate reverse splits. I'll go on record and say I hate reverse splits.
They are the death of action.
Of course, in the VXX because it needs to reverse split. But other than that, in like a real stock, I think no reverse splits. That's just bogus Citi. Sorry. That's a pet peeve of mine.
I think for a while there, because Henry, you guys have been doing our most actives on Options Insider at the end of the day for a long time. I'd say for a solid year or two there, it was just Citi number one every day pretty much. Or if not number one, number two. It was ridiculous.
It made some careers. I mean, you had several million contracts a day that was Citi. And, that was 15% of the volume back in, 2009.
Hey, speaking of volume, this is a little bit of a tangent, but since we have you on, it's a good time to kind of get into this a little bit. You and I have talked in the past on other shows about some of the interesting quirks to options volume, shall we say, and the different trades that exploit it, like the div trades. What have you been seeing in the div trade realm now post this big change over at OCC, where, if our listeners are not familiar, they really changed the exercise requirements so that you have to essentially be net long, which makes it very difficult, if not impossible, for the vast majority of the players who are executing these sizable div plays to really keep putting them up. Have you seen a market decrease out there, Henry, or are these guys finding some ways to still game the system?
Well, there's still ways to game it, but the ways don't result in 3-4 million contracts trading. It's definitely shut it down, to some extent. But you also have to keep in mind, people in finance are very, very smart. They apply a lot of brain power to figuring out how to get some money out of any system you're looking at. And if somebody's going to fail to exercise, 10-15% of the volume, which is kind of what you see in spiders, in those quarterly cycles, and a few other names typically as well. There are some ways to go at that. They're not quite as low risk as the total kind of wash trading that was going on where I buy 500,000 calls from you and you buy 500,000 calls from me and we both exercise them, which the only real leftover risk is kind of systematic if somebody screws up the exercise notice. And that happened once. But so nowadays you find more kind of one-way trades. I'll buy these calls from you and exercise them. You can buy a different strike from me and exercise them, and then we can kind of net it all out. And I think people are going to keep coming up with ways to take advantage of that percentage of the volume that's failed to exercise.
That was my response to OCC, because they came to me a while back, 6-8 months ago, say, hey, we have this idea. What do you think of this to fix div trades to make it net long? I said, that's a good start, but people are just going to jump into verticals. That's what they were doing before. They'll do that now. So they kind of scratched their heads, and they went back and looked at all their data and said, well, people aren't really doing verticals now. They're mostly doing these wash trades, like you're saying. So this will kill a lot of that. So I said, no, that's better than nothing, of course. But I kind of, my next thought was they're just going to start jumping into verticals, and it sounds like that's exactly what they're doing. So yeah. Money will find a way at the end of the day.
Exactly.
So, yeah, maybe there'll be some other tweak they'll make now where you have to do verticals on some ratio or something. Who knows? But at least they're taking proactive steps. And this was a big deal for them because this was the first time OCC has done anything even remotely like this, which could be seen as some sort of regulatory action. So it was kind of interesting. And it's interesting to see what the impact of that on that paper that you guys watch on a regular basis over there as well. Of course, you mentioned Goldman Sachs earnings before the open. We had before the open tomorrow, CITI earnings before the open today. We'll see if Goldman can maintain that. Of course, our friends over at Bloomberg today beating the drum about VIX. I know, Andrew, this one, you must love this one. They're going on about VIX puts and how these this data they have goes back to last week, July 11th, where they said on that particular day, the puts exceeded the calls by 73%, which was their most since they've been tracking it since October 2011. Of course, that's interesting because we've been talking on this show for a while now about how much lower VIX and VIX cash in particular can drift in this environment. If we have this steady upward movement, we're still, a lot of these days, we're still moving 0.5% to 1%, sometimes 2% a day. There's only so far down you can go in that type of environment, unless we're heading into more days like this of fractionally unched days. So, Andrew, I know this one probably caught your eye, this story. What's your take here on our friends over at Bloomberg?
There's some pretty good roll yield coming into the August future still, it's like $2. So there is, because the VIX options price off the futures, not off the cash. So
is that so? Let's reiterate that, because I don't think any of us here knew that.
That is so. So the VIX options do not price off of the VIX index, the VIX cash.
You just changed my whole worldview, sir.
The VIX options price off of the future. So the July options will price off of the July future in VIX. That's my southern accent coming through. The August options in VIX will price off the August VIX future. So the underlying price for August in VIX right now is 1580, not 1379. And we actually had a little trade in our strategy letter because our clients, we trade VIX a lot, mostly because there's all this squishy premium in the futures. So on Friday, actually, the VIX, the July VIX future is actually trading right around 14.5, 1460, with the cash trading 14. So there's actually a nice little play there for puts. So essentially, though, if you don't know how to create price underlying combinations with VIX, you're never going to know where the underlying's trading, or you got to know where the futures are. So I think, barring some kind of market, some meltdown or some goofy thing happening somewhere, there is a tremendous amount of pressure on VIX options. So the reason I think people are buying VIX puts for a very good reason, and nothing really happens, you're going to see those things gain in value quite a bit. So, yes, I agree with that 100%.
If you're going to do accents to mimic VIX paper, if VIX paper is anything like SPX paper, you got to do a French accent. I don't know about the Southerners.
Yes, oui, oui. Oui.
There we go. Let's just
I
alienate
think French
everybody.
Canadians in Maine, but that's up in Aroostook County, and that's too far for me.
Let's alienate Southerners, alienate our French audience. What's left? We're on a roll here today.
I don't know, a good chunk. Well, we didn't alienate any Chinese or Spanish speakers, so that's 3 billion people right there.
Yes.
So we're still okay with a good part of the world.
The show is still young. We still have some time to keep our alienation streak going.
So, yeah, I was looking at that, actually, and then something came out, some Citi equity analyst saying that the VIX is not a fear indicator, some total goofball thing. I was reading it. It was a report by Reuters. That's why, of course, Option Pit has a business, and we explain actually how the VIX works, how it's priced, what it does, and how you can create trades with it properly and not waste all your money. Thankfully, nobody understands really how it works, or we wouldn't have a great business, but we do. So for that case, yeah, people should be buying puts right now, because if the Fed if they have created this sort of landing pad for the next 2 years, and we have, pretty decent corporate earnings, Alex and I talked about it last week, we could see higher equity prices. Higher equity prices moving at, 0.5% a day, VIX is going to get crushed. Now, the thing is, it gets crushed to 12 and a half, but you're talking 1580 in future premium. Now that's 1580 over 12 and a half. That's $3 of Southern movement. That's a pretty good chunk of down for the VIX options. So if you're buying, let's say, the 14 puts in August, you're getting them priced with the 1580 underlying. So there's a lot of, I believe there's a lot. I mean,
there's room in them that are hills.
I have positions on trying to take advantage of this. So does Option Pit and our strategy and stuff. But that's what we're thinking. Yes.
Volatility question, Henry. Are there still large dispersion books out there? Because that's what would crush the VIX.
From what I've heard, the liquidity in the single stocks has gotten pretty poor, which makes that kind of business trickier because they just can't really go and get much size. I've had a lot of people complaining about how a lot of the institutional side people complaining about how all the volumes move to the front end, to the weeklies, and there's no vega to that stuff. So they need 6 months and 12 months vol, which is very chunky to trade, and it's hard for kind of the prop guys to find the liquidity in that stuff because it's really there's only a handful of players that'll trade it. So I actually don't think that business is nearly what it was, 5-10 years ago.
Your years in the business, is liquidity worse today than it's been in the past?
It depends who you ask. If you ask a retail person, I think it's the best time ever. They're not really looking to trade a 9-month option. They're not really looking to trade a 5,000 lot. I think you really have ended up with kind of what the institutional people were afraid of, which is this bifurcated market where there's nice, tight, small markets. You can trade 10 lots and 20 lots all day long, 2 or 3 pennies wide in the liquid products. But man, as soon as you start to get away from those products, or you start to get bigger, it's a real challenge. Guys that I talk to that really do what I used to do. It's really all about, okay, so the screen says this option is, 3 bid at 320. My guy wants to buy 10,000. It's almost a crapshoot. Is 330 the right price? Is 380 the right price? And it can be a little frustrating because the customer sees 320 offer on the screen, and that they're willing to pay a little bit more for the liquidity. They know that they don't want to get filled over the next 3 hours, but they think they're getting ripped off if you go back and say, look, the price is $3.50, because that looks like a 10% markup. So I think liquidity is definitely worse now, except in the top 10 or 15 products, Apple, Q, SPY, Tesla, these things really trade like water because there's a lot of people involved. But as soon as you get down, away from that top 50, there's no liquidity, there's no volume. You have this chicken and egg problem where nobody wants to stick their neck out and quote a decent sized market because they're afraid of the runover trade. So, they say, look, I actually talked to a guy. I couldn't imagine how a market maker would make any money in penny-wide Apple. And I was talking to a guy that I used to work with, and he said, we make all our money in Apple. He said, I don't even know why we quote the other stuff, because, the Apple is, 500,000, 1 million contracts a day. And even if it's just a penny or two wide, it's kind of the right quality of paper. And people have evolved their systems so that they can actually capture edge, even though the market's only 2 cents wide. And that's what impresses me the most, because I don't know if I could do that.
Yeah, it's funny. You mentioned dispersion trading, Alex, and all the guys I've seen who are still viable in that, they seem to have migrated all their dispersion trading to Apple. Apple is an index unto itself these days. And you can still, like Henry said, you can still capture a decent edge even with these relatively tight markets out here, which seems counterintuitive, but that is one of the last bastions of profitability right now for a lot of these firms. It's bizarre, but true.
So I hate to pontificate here. So how do we fix it, guys?
Well, the show only has a half an hour left or so I'm not sure how much how deep we can get into that.
We need to get Henry back then.
Yeah. Well,
and I'll be quiet.
On that point, though, Alex, it's kind of interesting, and this is an interesting, I think, one. I'm sure you've seen some interesting data on this as well, Henry. Just a lot of people were pointing towards the minis as being the start of a way to fix that. It would attract more retail back into the game. It would provide a way for market makers to hedge existing positions in an alternate product. And yet we haven't seen that at all. And we haven't checked in on the minis in a while. Henry, I know you're seeing these numbers going up every day over there at Trade Alert. Are you seeing any uptick at all in the minis? And what are you hearing from your clients out there? Any sort of interest in these things? Are they pretty much dead in the water right now?
No, they pretty much suck, and nobody's quite sure why. They don't suck as much as the jumbos, though. It's really interesting because I use Interactive Brokers to trade, and on their system you can put all three quotes right next to each other. So you can look at at the money SPY call 30 days out, and you see the normal size, the 100 multiplier option is 2 cents wide, and then the mini 6 cent wide, and then the jumbo's $2 wide, and it's a joke. And it doesn't make any sense, right? The minis, I'm not quite sure why they didn't kind of just let people auto quote the minis, off of their normal size quote, and effectively make it a phantom market, because there's no excuse for making your mini quote 6 cents wider than your regular size quote, except that people do, and it's not that competitive. And, I think part of that comes to the amount of resources that it takes to quote, especially something with so many terms and strikes like SPY. You basically are dedicating some expensive hardware to do this. And there's risk, every time you turn on your auto quoting machine, if something goes wrong, it could be kind of disastrous. I think the minis, they have the potential to kind of be the right market for retail, and then leave the normal size contract to the institutions. But it's not happening right now. Part of it, I think, is you have a situation nowadays where the exchanges, they don't promote anything except their proprietary products, because, why does the ISE want to go out and promote Google options when there's, 12 different exchanges to trade them on? Every dollar they spend, they're doing everybody else a favor. So they gravitate towards, the things that are purely theirs. For ISE, it's FX options, and you've seen it. For SIBO, it's VIX and SPX, and nobody really cares about the single stocks anymore because nobody has exclusives, and so the marketing is very poor, and I honestly think that the exchanges don't care so much about trying to influence their members to make super competitive markets in the single stock options, because they don't really care about that stuff anymore. Everybody's trying to find their own little exclusive niche one way or another. And I think that's a big part of the problem. And that, Alex, I don't know how to fix that. But it really is a problem. It's not being marketed, and it's really not being nurtured the way it used to be.
Too much fragmentation because of too many exchanges?
I don't actually mind the fragmentation by exchanges, kind of like, like Option Pit has a business because VIX is very complicated. We have a business because fragmentation is a big challenge. So, and the truth is that fragmentation is invisible for most people. The Gemini, the ISE second exchange is supposed to start in a couple of weeks. Most people don't even know about it. Because, even retail, of course, they're just going to say, smart route it and they get a good fill nowadays. Even institutional guys, they're using, smart routers provided by somebody. They don't even notice that there's 12 exchanges today. So that, I think the technology, and the vendors have kind of solved the fragmentation problem. I think it's separate from the incentive problem in terms of marketing. I mean, I guess the truth is, you are splitting liquidity across 12 exchanges, and there are some firms will, seamlessly make markets everywhere, but a lot of other firms have to pick, so you do have little pockets of liquidity here and there that probably are a little bit inefficient.
And, with that note, I think we'll have to keep on rolling right on into our Odd Block segment.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we break down some interesting and or unusual options activity. And since we already kind of hit on some interesting activity in the trading block, we'll just do a quick one here today. And today's activity definitely falls into the unusual, if not size-wise, it's pretty small, but more in terms of, I guess, interesting the way it was executed and what the end user was actually up to here. This is going to be in good old United Online Inc., ticker symbol UNTD. They closed today at $7.78, down about 2% on the day. And like I said, size-wise, this one didn't really light up the tape. This name does about 180 contracts a day. They did a whopping 470 today, so the size wasn't there. It was more of what they were up to. We saw someone coming in and trading a combo at some pretty weird levels. We saw someone picking up the D7.5 calls, selling the D7.5 puts, doing it for about a 15-cent debit, doing it only about 100 or so times, so 200 contracts total. Remember, a combo synthetic stock. You're buying the call, selling the put, you're getting synthetically long the stock at an interesting price. We got some open interest, only 1,700 on the calls, so it could be closing, but again, it looked like it was a combo. But the way this trade went up really seemed to have caught your eye, huh, Andrew?
Yes, well, we're not going to be able to tap Henry's 9,000 leap calls on Friday, okay?
Yeah, that was the winner.
So he sized us out for the Odd Block. So we're done there. So what we have to do is we have to go deep into the strange category, not just the outright big splashy trade. But what I did pick this out is this felt like a trade where the customer was kind of scooping the bottom. And sure enough, 15 cents, that's $7.65, and now we're closing $7.78. So now the trade is to the good by at least, 13 cents straight up. So I just felt like the customer, we were just talking about low liquidity too. The guy can't buy 100 calls and sell 100 puts in one shot. He had to buy some calls, sell some puts. It didn't really go up as a spread. I don't believe that when a trade that looks like it should go together, they just couldn't find the other side, it feels like. So, but they're trying to execute electronically, it kind of hit all the exchanges. But this is, I think this is somebody scooping the bottom in this UNTD. Company pays like a 40-cent dividend a year for pretty much ever, it feels like. It doesn't do much, but I just felt like this was a scoop on the bottom. Not quite really a takeover stock, but just a good old-fashioned combo trying to buy the bottom in a stock for basically 10,000 share equivalent. So
not a bad price.
Let's see how the stock performs, but 40-cent dividend looks pretty good in a stock that's under $8. That's
we'll take it.
Yeah,
of course.
And they do like Juno Online and stuff like that, Net Zero.
Yeah,
all that cheapy internet stuff.
Well, this kind of speaks to, the interesting thing we were talking earlier in the trading block about fragmentation and the issues with execution and how retail have it pretty good, institutions have it pretty rough these days doing any size. But we're starting to see some of that trickle down into retail a lot now. You start getting into any sort of these types of spreads. This is a straight up combo. This isn't as difficult, and yet still it had a hard time getting done in this name that's fairly illiquid, to be fair. But we see this even in more liquid names now, and I'm sure you've probably seen this a lot more now, Henry, too. People coming in doing, 10, 20, even 30 lots of relatively straightforward spreads, maybe some simple calendars and things like that, and they're having a heck of a time getting filled just because the spread books are so siloed on every exchange now, whereas you can walk up and lift an offer on Apple and get filled all day long as a retail guy, or even work it somewhere in the middle and have a reasonable chance of getting filled. The NBBO quote you're seeing in a lot of these spreads is meaningless for a lot of these retail customers. And, of course, explaining that to them is just a nightmare of a process. So are you starting to see that trickle down there, Henry? I know we're certainly seeing that here at Options Insider, where, this traditionally was a 10,000 up problem, but now now even your more sophisticated spread retail guys, 10, 20 lot guys, are starting to be impacted by this fragmentation. Are you seeing that as well?
Yeah, it's, things have, I think things are improving. I mean, the ISE launched their implied order functionality, which is really a big deal. I don't think they've rolled it out to that many tickers yet. But that's a major step, because now if you want to buy a straddle for $3 and there's a $1.50 bid on one offer on one option, their system actually will make you a $1.50 bid on the other and effectively leg it for you, which is really is pretty awesome, because it actually tightens up markets everywhere, and it means that you no longer have that weird condition where somebody's like, I could do it on the screens, but I can't get filled in the complex order book. If the other exchanges, ever get up to speed on the same thing, or God forbid somebody actually build one that can cross exchanges, which supposedly Interactive will do, although I think they're pretty careful about it. You may start to get, much better behavior than having to basically go pay bid to offer to get a spread done. I'm looking at this United Online, and even though it is a kind of junky name, that call open interest since March has tripled. So 1,400 contracts back in March. The put open interest hasn't budged. It's gone from like 500 contracts to 900 contracts. Call open interest has gone from 1,400 to 5,800. So it's teeny tiny trades, but right now I'm looking back to see if this call open interest has ever led this put open interest by this factor of 8 to 1. There may be something to that. That's an open interest ratio of 0.17. It's a weird name, actually, if you look back. There seems to be a lot of spikes of put open interest, but the call open interest is way ahead of puts right now.
And that's what's cool about the trade alert stuff that you guys offer. You can parse this data in that way, which makes it really interesting. And I was just going to say the same thing. I think even though it's a small trade, I think UNTD has made its way into our to-watch category now, to keep an eye, not just on this 100 lot to see how this combo works out, but you're right, all this call open interest to see if these guys have been on the right neck here, or if they're just barking up the wrong tree. But an interesting one.
Yeah. The problem is, because it's such a thin name, trying to find an option trade that's doable, without kind of automatically ripping yourself off. I mean,
it's hard.
You have to be you really have to think about it. Say, before I pay 20 cents for these calls, when I need to get out because it doesn't pan out, am I going to take a 50% cut? That's a horrible bid offer. You have to keep that in mind, that options have leverage and they're great, but you do want to kind of think about, this might be one of those names where you just buy some stock, because the stock's probably a nickel wide, or you're very careful about how many options you buy, because it's one of those names that you can be right, the stock could go up $1 and you could scratch.
I think we have a title for today's episode, Ripping Yourself Off with Trade Alert. I like it.
I was about to say, we're going to cue the Viceroy there. Just buy the stock instead.
There we go. Speaking of cueing the Viceroy, it is time for Alex Jacobson to dive into the mix once again with the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
Now, Alex, I know the big tape-moving event in your life today, aside from the grandfather news, obviously, is, of course, the one we didn't have time to get to in the trading block. It is that the Twinkie is back.
Yeah, we have priorities here.
So what else caught your eye over there, aside from the ever-growing number of Twinkies on the old OX office floor?
I will be at Walmart this afternoon. To your point, Mark, it's the first day I didn't have to tear apart my notes at 5 minutes up. For the last 2 months, I could have come in at 2:55 and done the show at that point. But I talked to the guys on the desk today, and they said phones were active, but there was no special tone today. A little bit of the banks, a little bit of technology, a little bit of Google for their earnings, and obviously that's going to kind of be the showcase event this week. But looking at the kind of nature of our clientele here, their activity last few days was predominantly in the banks. Bank America is still coming up this week, but it was a quiet day. I mean, it was a relatively unchanged day, and I even looked at the forums, our OX social forum today, and the only thing lighting up the tape there was some conversation about Priceline and Google. But other than that, real quiet day, non-eventful day, but really looking forward to the rest of the week. When we did the show last week, I talked about good earnings, and I thought we'd see Dow 16,000 by this week, and got a lot of emails that pointed out the fact that I was clearly incorrect, but a quiet day today.
Yes, everyone's keeping their powder dry, it seems like, ahead of the big kickoff of the serious names in earnings season. So let's get right to it with our Around the Block segment.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we peer ahead into what we're watching, what's on our trading screens for the rest of the week. And as we touched on last week, and as Alex just touched on again, it is indeed that time of year. It is earnings season. A lot of big names coming out this week. Of course, on the 17th, we have IBM, we have Intel, and good old Bank of America, a popular one I know for a lot of you out there. And then on the 18th, the big day, we have Microsoft, which has been showing some signs of life lately, which is unusual for that name, particularly going into earnings. We have Nokia, which I know everyone's just hanging their hat on these days, the big market mover, Nokia, trading $4. Google, of course, the big 900-plus pound gorilla in the room, and my favorite, CMG, the old stealth Apple, as I like to refer to it, getting a lot closer there, closing in on the 400 level again, while Apple is pushing the other way, down south of 400, so perhaps they shall meet yet again. We shall see this week. A lot of big names really to watch this week. Mr. Andrew, we'll start with you. What's really catching your eye for the rest of this week? What earnings are you particularly paying attention to?
Well, I'm looking at Google and how that might spill over to Apple, because the Apple at-the-money straddles is trading 5.3% of total stock value, which I think is a low for the last 8 earnings cycles. So that is now, if Google actually can put a move up, I wonder what, we're looking at basically, owning Apple juice, up into the earnings is not really decaying very much prior to earnings. So looking at that, and if continued good earnings, more pressure on VIX, again, in our vol report today, I thought 13.5 was possible by midweek, and we actually hit it today. So the gravity for vol is certainly down. And again, looking at the vol products, I think we have I'm not going to say unique, but I think there's a pretty large overhang of premium in the futures. Obviously thinking that this rally can't last and that we're going to blow up at any moment, which is why I think it's there. If the earnings are decent, Alex and I agree on this, although it might be scary that we're both agreeing on something, that decent earnings pushes us higher, pushes vol lower. So far, all the earnings have been okay. And usually when the financial earnings are pretty decent, that leads the way. So that's what I'm looking for: higher equity prices and lower volatility if the trend continues.
So you're doing your free gamma trade, going into some earnings, scooping up some Google here?
Actually, Apple, so far, Apple's just kind of been back and forth. Like one day it's up money, the next day it's down money. The Microsoft has been a huge winner. We had that one on from like the low 34s, and that blew up over 36. So we're already able to take that one off.
Yeah, good old Microsoft. Actually, like I said, signs of life for the first time. They were the most reliable premium right for a better part of a decade. And now they're finally coming out of that. It looks like with a little bit of movement, you could trade some your good old iron condors out there, and it works out pretty well.
It's because you still get volatility for like 20%.
Yeah,
I mean, if it moves like $2 in 3 days, you're going to win.
There are worse things.
So, yes, I would not be selling a bunch of juice in that thing.
And of course, you mentioned cheap straddles and Google. That study we talked about recently, although pretty much the only studies that have been done to date on straddles going into earnings, of course, those Goldman studies from a few years ago, all of them pointing that names well over 100 seem to be underpriced relatively from their straddles compared to post-earnings performance versus those names under 100 that tend to be overpriced. Google well above 100, so perhaps by that math, this straddle here, which looking at about $43 here on the 925 straddle right now, is dramatically underpriced and should be a screaming buy apparently.
Well, that's the funny thing is where the yields go on these straddles, and interest rates are ticking up, so it's going to be those trades are tougher. When interest rates are super cheap, funds could borrow money and they could just sell the heck out of premium. And as interest rates go higher, they're a little less able to sell juice as much. So we'll see. But I have a feeling nobody is expecting much out of earnings, at least from what I can see from at the money straddles. And like the vice versa says, we could get some upside surprises here, and that leads us. That could easily lead us to the 16,000 level.
All right. Thank you for that, Andrew. And Mr. Henry, we didn't prep you here, but you've listened to the show enough. You know how it works. What are you watching here for your Around the Block for the rest of this week? What's really top of mind and top of your screens?
The rest of this week, I think it's kind of high-quality blue-chip earnings, and I don't actually think we're going to see that much excitement, off of Goldman and Coke and B of A. Next week, I think you get some fun with Netflix, Tesla, and some of these names that, move 25% on earnings. Tesla has been kind of amazing to watch. And, you have a real tug of war going on between some fundamental valuation-based people and some visionary people. And it's either a $300 stock or a $20 stock. And it's keeping a lot of people busy. So we're gonna keep watching those, especially like I said, kind of the higher volatility names that are after July expiration. You got VIX settlement on Wednesday morning. That can be kind of interesting to see. 100,000, a couple 100,000 SPX contracts trade in that settlement print.
Yeah, interesting stuff. The, of course, VIX settlement, that's pretty much kept you guys in business from day one, just explaining all the minutia of what's going on that VIX settlement alone. I think could occupy a lot of Trade Alert's time. And Tesla's just this crazy beast. It doesn't seem like that long ago on this show that I think it was before your time, Alex, so it was probably Grigas, but it wasn't. It was probably a little over a year ago. We were debating whether the 20 puts were a risky sale or not. Now the thing's trading 120, and you're right, Henry, the zealots are out there screaming, this is the next big thing. This is the next $300 name. Get in now. It's hard to believe that this little name that was just pushing these ridiculous $100,000 plus roadsters for whatever reason has just captured the imagination. Everyone's looking for the next big entrepreneurial success story for whatever reason they think it's here. and they've glommed on.
I'll tell you one thing that we're really very closely looking at is, the put call skew in there that really, shows you how frothy those calls are. It's basically flat right now with that 25 delta call and put around 75 vol. When that thing starts to tilt too far up to the call side, which happened briefly in Apple when it was around $700, and you can put on a collar that normally costs you money, you can put it on for a credit. Obviously there's risk in the trade, but this doesn't happen very often. And that might be where I jump in is when I can put on a trade that I feel like I'm getting paid for that I really shouldn't.
That's funny. You're right. We talked about that in Apple in the past, where the Apple zealots would just bid that skew so out of control that you could do verticals and collars for credits or very near to the credit point. And I guess the zealots have now moved over to Tesla. That's the new place.
Exactly. The one warning is that is how the skew lined up in Leap on Friday. So sometimes things come true to that upside.
Yeah, so if you're doing the 1/32 ratio, you may want to reconsider that just in case.
That can hurt.
I'm doing this for a 50x credit. What could possibly go wrong? All right, and last but certainly not least, Mr. Viceroy, what are you watching for the rest of this week, sir?
I'm only going to add one name to earnings, and that's Intuitive Surgical, which is already warned, has already been beaten up, has already kind of laid the ground for an earnings disappointment, but they will come in on Thursday, and if it's worse than they led us to expect, I think that stock loses favor quickly. I think it's all been said. IBM, Bank of America, Abbott and Baxter this week, Morgan Stanley, Google, Verizon, but the street's going to focus on Google. From an option standpoint, that's going to be the big play. Maybe a little bit in surgical and IBM, but that's the laser focus this week. My weekly commentary about macro, the 10-year moderated. We talked about VIX moderating. I take to heart Henry's point about liquidity. I think it was great to have a former liquidity provider on the show today. I actually had a call from an old client many, many years ago, an offshore client who was bitching at me about liquidity and the lack of institutional support, which doesn't bode well. We, the industry, got to figure that out. But that's what we're looking at this week.
All right, thank you for that, Mr. Viceroy, and that is, of course, all the time we have for the show this week. But before we go, I'd like to check in with each of my cohorts, my partners in crime, to see what's going on in their respective necks of the woods. Starting off with you, Mr. Andrew, what is cooking in the land of the pit?
Plug, Option Pit. If you want to see what we do, how we kind of run a live, it's not a dispersion book, but it's a live volatility book that we run on Option Pit Live and that we keep track of in the strategy letter. You have a free entry on July 17th to be able to sign up and look at Option Pit Live. So surf on over to Option Pit Live and send us an email, and we will get you signed up for the event. And also, I think it's going to be the 24th. We're going to be walking through trades and how we put trades on, adjust them, and take them off in our strategy letter. But so it'll be a position management webinar toward the end of this month. So you'll be hearing more about that in a little bit.
All right, and Henry, what is coming up in the land of Trade Alert and Option Alert and all the other good stuff you have cooking over there you want to let our listeners know about?
At Option Alert, we have some nice new things going on because we never rest. We are rolling out spread alerts, which actually put together the 40% of the flow that is complex orders, and it's very complicated to do on the kind of on the output side in terms of time and sales. But we've got most of the structures working now, so we can actually see a risk reversal trade versus a strangle. We can see 1x2s and kind of alert people to exactly what the structure was, within half a second of the print, which is exciting for us because it basically means we're saving people some time and kind of adding some transparency to the process. So that's good. And then we also are in the process of launching a chat room in conjunction with Jamie at the Hammerstone Group, and it's much more interactive than kind of our alert and recap tool. We have some good professionals in there to basically comment on flow and discuss flow through the day, and people can try that out over at thehammerstone.com, and they can even talk to me and talk to Fred, and we can kind of talk about what's going on as it's happening.
All right, thank you for that, sir. And last but certainly not least, Mr. Alex, what is cooking over there in the land of OX?
To showcase a couple webinars, Leaps is the stock replacement on Wednesday. Idea Hub, Wednesday after the close. Hub today had a Google Iron Condor in it expiring next week. Even money, $10 Condor you could sell for about $5. So that was interesting. Obviously, that's because of Google earnings. Thursday, futures for active traders, and then we'll have some more to talk about on Thursday's show.
Even money Condor. I like it. You don't see that happening too often. I should mention, Alex, before we go, we talked before about your July 3rd webinar and what a success that was. I happened to just see the other day, I was checking something on our download stats here, and I think we set a record that same day for an off-show day. We didn't have any shows coming out. The option block wasn't coming out that day. Yet we did like 12,000 something downloads that day. So something happened on July 3rd that just brought the masses to the option block, whatever it was, and to your webinar, it sounds like.
Yeah, I think Mike's experience was early days of the internet. And I know that sounds corny to say, but I think there are a lot of people on July 3rd that aren't packing up the car and are sitting on a machine, looking for something to do.
Apparently many thousands of them, which came as a surprise to me. So that was very interesting. Like I said, setting a new single-day records for an off-peak day on a July 3rd of all, no less. I guess a lot of people wanting some option block to go with their barbecues and their fireworks. Maybe we make a good soundtrack for a firework display. I don't know.
Who wouldn't want the option block?
Exactly. All right, and on that note, that is going to do it for us here on the old Option Block program today. I, of course, want to thank our guest, Mr. Henry Schwartz from Trade Alert. You can find out more about everything he has going on over there at tradealert.com. And Henry, we'll have to bring you back on the show again real soon. It was fun having you on. And, of course, on behalf of Andrew and Uncle Mike, who couldn't be here today, and Alex and myself, we want to thank all of you out there in the listening audience for downloading and streaming and continuing to set new records for this show. We love it. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.